Hello everyone, it's Cody here. In this video, I will share with you all the details you need to know about stock splits for Tesla and Apple stocks. On July 30th, Apple announced a 4-for-1 split on their common stocks, and Tesla also declared a 5-for-1 split on August 11th. You're probably wondering what's the impact to their stock price before or after the split, whether you're already a shareholder or you're thinking about investing in these two stocks. Trading these stocks has been my secret passive income source that generates consistently thousands of dollars per month. I was able to quit my full-time job and start living life on my terms. I will also share with you other stocks that are likely to announce a stock split at the end of the video. I will break down this video into 4 parts to make sure that it's easy to follow. Part 1, why Apple and Tesla decided to split their stocks. Part 2, how does a stock split actually works. Part 3, more importantly, should you invest before or after the split. Part 4, what are other hot stocks that are very likely to announce a stock split. Let's get right into my part 1. Why Apple and Tesla decide to split their stocks. Both Apple and Tesla want their stocks to be more accessible to a broader base of investors. I'll also explain why simply by adjusting the stock price can make investors feel like the stock price is more accessible. Tesla's stock has increased from $200 to $1,600 within 1 year. The panic in March halved the stock price, but we are now seeing a new all-time high. It's the first time in the history that Tesla splits their stock. You might be wondering, why Tesla did not split their stocks sooner to attract a broader base of investors? To be honest, I don't know. But if I would have to guess, it's because Tesla board of directors themselves did not foresee Tesla's stock price to increase by 8,000% within 1 year. And when Apple announced their stock split, Tesla would like to ride the tailwind with one of the most successful tech companies in the world. On the other hand, this will be Apple's 5th stock split since going public in 1980s. Apple's common stock splits on 2-for-1 basis in 1987, 2000, 2005, and on a 7-for-1 basis in 2014. So if Apple stocks had not been split before, it would not be at the current price of $460. Instead, it would be at an astonishing $25,760. Stock splits are a purely mathematical exercise that divide up ownership of a company into larger number of lower price shares. It's like cutting your pizza into 8 slices instead of 4. Nobody gained or lost anything here, but you can distribute smaller slices to more people. A $1,600 stock could be out of reach for an ordinary investor with a limited investment budget. The price tag alone can keep many investors away from high quality stocks. This is becoming less of an issue these days because some stockbrokers allow you to buy fractional shares of high price stocks, and exchange traded funds offer another method for dodging a high single stock purchase price. Still, you can't match the simplicity of directly buying full shares of company you actually want to own. Some people might not even be aware of the more complicated options. Part 2. How does a stock split actually work? The mechanism of a stock split is quite simple to understand. I will use Apple stock split dates as an example, and this could be applied to Tesla or any other stock splits. Apple announced the stock splits on July 30th. The stock split would not happen immediately, but instead focus on the following dates. If you own any Apple share by the end of August 24th, you're entitled to receive additional shares due to the split. By the split date on August 28th, shareholders will be given the additional shares after the closing. Also, the last important day is the X day on August 31st, where Apple will be trading at the new split adjusted price. I know this might be a bit overwhelming, so I will simplify for you by walking you through the Apple 4-to-1 stock split as an example. If you own 100 shares of Apple stocks before the end of August 24th, you'll be given 400 shares after the closing on August 28th. If we assume Apple will still be trading around $460, the stock price will open with $115 on August 31st. And that's it. It's that simple. It's the same amount of pizza whether you're eating as a whole or cut your pizza into 4 slices. Part 3. Should you buy before or after the split? Like I mentioned in the video upload on March 30th, I've already bought in some Apple stocks when it was trading at $247. Also, I bought in more Apple shares at $321 in the video demonstrating how I would invest in a $10,000 portfolio on June 1st. So Apple has already taken up a good space in my stock holding portfolio. I will not buy more unless I see a major pullback on Apple stocks. I will continue to write cover calls before the split split and write even more cover calls after the split until my Apple shares eventually get called away. Even though I'm not buying more Apple stocks at the moment, I still think Apple is one of my best investments. Their earning has been growing substantially year over year. Apple has always been leading the trend, and the approachable brand it has created over the years are just admirable. For any of you who don't have $46,000 USD to buy 100 shares of Apple stocks to write cover calls, you now have the chance to purchase just 25 shares of the stock for a quarter of the cost, and your 25 shares will be split into 100 shares after the end of August. You can then write cover calls to generate more passive income while enjoying the stock appreciation. In my opinion, Apple is as appealing before or after the split, but because it might seem cheaper to investors after the split, it's very likely that more people invest more into Apple stocks. Before I move into the most important section, I would like to thank you for staying until this part of the video. Unlike the disclaimer, past performance is not indicative of future results. Simply tapping the like button on the screen will not only allow you to change the future of this YouTube channel, but also help bring more people like you reach financial freedom sooner. If you want to join the discussion with more like-minded investors, join my private Facebook group by clicking on the link in the description while it's still free. Part 4. What are other hot stocks that are likely to announce a stock split? Berkshire Hathaway has the highest stock price on the list, and the stock price just seemed out of reach for most average investors. Warren Buffett has stressed multiple times that he intends to keep it that way. He will not split the stocks so that traders or investors who want to take short-term profits on the stock will be discouraged. There are other companies like Tesla who will be splitting their stocks, and Google, Chipotle, and Amazon are all possible candidates. I would like to focus on Amazon because of the rumors that are going on in the stock market right now. Amazon's stock price has almost doubled within the past year, and the panic in March actually just emphasized how Amazon's business model could continue to grow in the future. Here are a couple of the reasons why I think Amazon is likely to consider splitting their stocks. Number 1. Amazon wants to keep up with the Jonas Brothers Apple. Amazon wants to compete with Apple to become the greatest company. Amazon will be looking closely to see what's the impact to Apple's stock price after the split. Apple's stock split announcement boosts interest in the stock even beyond its already impressive levels. Number 2. Amazon has the chance to be included in the Dow Jones Industrials. The Dow Jones Industrial include the top 30 market capitalization company. This is like joining the Hall of Fame for any company. In order for Amazon to be invited, it has to reduce the stock price significantly because Dow is a price weighted average. Dow will not allow a company with such a high price to skew the average. Therefore, if Amazon ever wanted to be invited, it has to do a 15-to-1 or a 20-to-1 split. Number 3. Amazon's high stock price is raising some political criticism. Amazon has been recently under fire for mistreating employees and whether it pays its fair share of taxes. Amazon's stock appreciation has not only brought Jeff Bezos a substantial wealth, but also the concern of wealth equality. Until this day, a lot of people still associate the stock price with the company's actual value. Even though splitting stocks does not reduce the company value, it could give the public the perception that it's not as high profile. Good job on staying until this part of the video. You all deserve to smash the like button for yourself and subscribe and click the notification bell and change it to all so you don't miss any future video. Thanks for watching and see you next time.